Good morning, everybody. Welcome to the Flow Show. Wow, what a day for the yen. And I don't know if many of you are up and around for it, but certainly a bit of a wild ride this morning, and we'll get stuck into that, obviously, in a moment. Just to reiterate, we have our sale. Time is running out to grab a great deal on access to the ForexAnalytix platform, as you can see there on the screen. And I'm going to offer a special bonus for anyone who signs up for an annual subscription between now and midnight on Monday, the end of the month. If you sign up for an annual sub, I will get you 12 months free access to the Peak Suite. If you don't know about that, you can check it out. It's a very good news content aggregation platform. Okay, it has access to Reuters headlines. It has access to us as well. As you can see, you can catch all our shows on the Peak Suite as well, all the recordings. It has tons of tools, feeds, videos, lots of stuff on there. So you can get this for absolutely free for 12 months if you take an annual sub with us at ForexAnalytix. So check that out. It is free. This site is free if you want to go and have a look at it for nothing, including no sign up. You can just go on the site, launch the platform, and you'll get stuff there. Obviously, you won't get everything, but you'll get a good idea of what's on there. And this is fully customizable, so you can add and take away all these bits and elements as you like to build your own screen. So if you do take a ForexAnalytix sub, an annual sub, let me know directly, probably better via my Twitter handle at ForexFlowLive. Let me know you've taken a sub and I'll get that confirmed and then send you the code for 12 months free for that. So hurry up, get it done, because it's not going to last forever. Right, let's get cracking. What's going on today? Start with some data first. Get rid of some of this stuff. Lots going on in China this morning and overnight. There was a bit of data. Let me see if we've actually got it on this calendar. Yeah, industrial profits for August year to date, 0.5% versus 3.6% prior. The year-on-year number, not the year-to-date number, the year-on-year number was down 17.8%. versus up 4.1% previously. So this will give you some idea. Those profits are well down. Why China's starting to act now. Now they've started or will be starting, have started and will be cutting their rates as we highlighted earlier this week in their big round of kitchen sink throwing. They will be cutting the big RRR reserve requirement ratio, as you can see, by 50 basis points there. That was effective today. So we knew that was coming. They've also reduced their 7-day reverse repo rate by 20 pips to 1.5%. They've also reduced the rate on their 14-day reverse repo by 20 pips as well. So the rate cuts are springing into action now. A lot of hopium still going through on this trade or these moves. Another big day for Chinese stocks. I'll just look at the composite number there. As you can see, another strong day. So as I mentioned in our chat room, I know I've got a trend line in here, but the techs aren't going to stand for much, particularly for the reason why and what they're doing to get stock markets up. Okay, so don't be relying too much on the technicals if you're trading Chinese stock markets, because if they've got the whole world and his mate over there buying stocks, they're not going to care about funny coloured lines on a chart. They've also seemingly going to be, or the PBOC is going to be creating its own PPT, the Plunge Protection Team. Those of you might remember that from the US under Trump. The various members of the Plunge Protection Team were sent out every time there was a little wobble in the market or big wobble in the market to smooth things over. So they are, the PBOC are putting together a quick action special team to help boost the economy. So they really are pulling out a lot of the stops to get things moving over there. Japan, we'll go there first, or go there next. Tokyo CPI, the first CPI numbers of September coming out, largely coming in as expected, but seeing some softness. That core CPI coming in at 2%, as expected, but down from 2.4. The headline Tokyo number 2.2%. That was also expected, but down from 2.6%. And the core number came in as expected at 1.6%, which was unchanged on the prior month. So a little bit of easing there in some of the Tokyo CPI measures, but still staying at or above target. So good news there. The fun and games over the new PM race. I woke up, I wasn't getting up for it, but I woke up, looked at my phone, and Dolly Yen was trading up at 146.20s odd. Let's get that up on the screen so you can all see it. I'm sure you've all seen it. So when I woke up, it was trading up here, and the headline was that it had gone to a runoff. There were 3 runners in play, 2 of whom were supportive of current Bank of Japan policy, one of which, the only woman in the running, Takeichi, was a bit of a dove. She wanted to keep rates low and to encourage the economy to grow a bit more. So she was the big risk person for this whole vote, and her getting through into a runoff between her and Ishida was the reason why we were trading up at 146s. If it had been the other 2 guys, Ishida and the other guy, we probably wouldn't have seen such a move. But because she was the big risk to it all, her being in a runoff meant that the market got a little bit worried. And then as soon as Ishiba got confirmed, you saw this move here, and a big move it was as well. The volatility was right up. We were trading up at 12.73 in the 1 month vols, so a big jump in vol as expected. Overnight 1 week vols also jumping from around 10% to 16, 17% for this event. So the volatility risk was always there, hence my warning yesterday on Twitter and in the room and so on. But anyway, here we are. The new guy's in. He's already commenting. He says that he needs to make sure that wages continue to beat inflation, wants to speed up new capitalism, and wants to bring back production bases to Japan. So a bit of a Trump borrowed line, make Japan great again. They're going to be probably going to elections at some point, but he's going to have to look at that in time. The election won't be a big thing because the LDP party are really the dominant party, but it's just a thing they'll do just to cement his leadership and get it all cross the I's, dot the T's sort of thing. He also will need to build his cabinet, so we'll need to know who comes in there. Long story short, the reason why Dolly Yen is trading back down here, and pretty much we're back around areas that we've been in before, is purely on the fact that it should be no change for the Bank of Japan, no negative pressure from the new PM on the Bank of Japan, but we'll get further confirmation, no doubt, on what Ishiba thinks about the Bank of Japan. Does he want to push them into a more hawkish tone, or is he happy with where they're at? Obviously, the Bank of Japan is independent, but that independence only goes so far. They do speak a lot, and what the BOJ does is often in line with government thinking as well. So there's still some stuff we need to find out about him and which way he's leaning and what he's going to do. But for now, Dolly Yen has dipped and it's stopped falling for now, at least. I've actually taken a couple of longs in this one, mainly because I'm matching what we've seen here and the fact that it doesn't look like there should be any big negative pressure on the Bank of Japan. They can keep going as they want to. But I'm using this against yields at the moment, because yields twos have been ticking up, not in any sort of breakout of this range over the last week or so, but it's not going down. Same with 10 years, they are continuing to keep this trend going. So this dollar yen move is a bit against what we're seeing in yields. And if there's no big shakeout from Ishiba and the Bank of Japan, then I'm planning, or my strategy is that we see maybe a bit of a bounce up in the dollar and dollar yen, which we know follows US yields quite closely. So if this leadership stuff washes out a bit, we go back to trading everything else, and that's my plan anyway. And I'll be guided by the levels. Obviously, if yields tip back and dollar yen starts heading back lower again significantly, I'll probably chuck it in. But I'm going low risk on this one. I'm not going a big trade on this one at all. But that's my thoughts for trading dollar yen right now anyway. Okay, moving on. We've had the SNB Vice Chair Schlegel out, talking both sides of the fence. Says rates at the current level still gives the SNB some room. More easing looks likely, but not pre-committing. A strong Swiss is a challenge for some Swiss firms. We started to get some of the flash CPI numbers out from Europe, and a bit of a soggy one, if truth be told. France Eurozone measure coming in at 1.5%. That's a big drop, 4 pips lower than expected, 7 pips from prior. The CPI number, their own CPI number as well, showing a similar theme, down 1.2%, much lower than expectations, much lower than previously. Spain as well in the same boat, 1.5% in CPI from 1.9 expected. The Eurozone measure doing the same thing, 1.7 from 2.4% prior. So a big drop in those inflation numbers. It was expected to come down in all these measures, but coming in more than expected. So that's put a bit of pressure on the euro, not an awful lot. I'm surprised it isn't much lower on the back of those numbers, but we have seen October expectations for an October ECB cut rising, particularly after that story yesterday. So maybe the market is a bit more priced that there's a potential for them to cut in October. So it's not really becoming a surprise trade anymore. That may be the reason, as I say, why the euro is holding up okay at the moment. Germany, unemployment change, doing a bit worse there, 17,000. That's a high unemployment, but the unemployment rate stayed unchanged on that one. But as you can see, their numbers growing in the seasonally adjusted numbers anyway for unemployment, up to 2.823 million. ECB had they're running this inflation expectation survey every month now. Not that it's on any calendars at the moment, but fortunately we keep an eye on it. So they got a 1-year inflation expectation number of 2.7%, which was expected, down from 2.8%. 3-year expectations dropped from 2.4 to 2.3. So both those measures coming down a pip. As we know, ECB is all about inflation expectations. If they're following this report, then if we start seeing CPI getting below 2%, then they're probably going to start sounding a bit more dovish. As it is with all these CPI numbers moving closer potentially to 1%, they'll be getting a bit worried about that. And as I've been saying, the next risk for central banks is that inflation numbers start going through target, and their target is close to but below 2%, and then they're forced to chase it lower, much like they were forced to chase inflation higher. And then we're going to start seeing talk about neutral rates coming lower, rates maybe getting back to zero, and we'll get all the extremists talking about QE and crap like that again. So just keep an eye on these numbers while they've got one handles on them. People like De Guindos are expecting CPI to maybe rise into the last few months of the year. So there may be a bit of a bounce coming. But if it doesn't, well, good luck to them lot going into 2025. Over in the US, a bit of data out from there. We had the final GDP number, which wasn't much ado about anything, came in at 3% for the final number, which was bang on where the flash numbers had been. There was a couple of softer numbers within that. Sales coming in at 1.9 versus 2.2, 2% prior. No big deal there. It's already in the rearview mirror. As mentioned, we're closing off, about to close off Q3 anyway. Durable goods was a bit more of an interesting read. We obviously had a big month last month, 9.9%, which had some big ticket items in there. It came in flat, which is good news considering it was expected to fall 2.8% in the headline number. As you can see there, that's the stripping out the defence. So that's where the big gains were. Came in at minus 0.2. The more core component, capital goods orders, non-defence ex-air, came in positive at 0.2%. Versus a prior 0.1%, although they've got revised down a pip as well. So again, positive numbers. That strips out all the big ticket items and focuses a lot on the more consumer-led goods and that sort of thing. So durable goods was expected to pull back, didn't pull back as much as expected. So overall, that's a positive number, more soft landing data. Jobless claims as well came in even better. So that's still not showing anything either on that front. The only thing I would say, we're just seeing a little tick up in the continued jobless claims. Not anything amazing, but they're just creeping up a little bit, 1.821, 1.828, 1.834. Still, if your metric or your marker is probably around the 2 million mark. If we're getting up above that, then maybe there's some further weakness coming in. Same with this headline jobless claims number. If that's sailing up well into the 300s towards 400s, then there's something going a bit wobbly in the jobs market. Pending home sales, that was out as well. A little bit on the soft side. Where are they? They are down here, coming in at 0.6%. Again, over the minus 5.5% previously, but a miss of expectations. Year on year, they're down 4.3%. So still a bit of wobbles there. This is August data, so it is a couple of months behind. That might start picking up again. Now we've had the big Fed cut. We had a bundle of Fed speakers and ECB speakers yesterday afternoon. Fortunately, or unfortunately, depending on your viewpoint, none of it was anything worth looking at. All a load of waffle and uninteresting crap. So that saved us having to sit through that anyway. The only one who did come out with anything was Fed's Cook, who's another one who wholeheartedly supported a 50 pip rate cut, and says on the path of policy, we will look carefully at the data and the outlook and the balance of risks. Sees a significant easing in inflation pressure, and then added something to the jobs picture by saying AI has the potential for negative employment impacts. No shit, Sherlock. US Treasury Secretary Yellen was waffling as well, said the US and China are cooperating in necessary areas. And again, I'm going to highlight there's a lot more meetings going on between countries and China. So that's Yellen saying what they're talking about. And then we've had Australia, Treasurer Chalmers, saying that they've agreed with China to cooperate further on investment, trade and decarbonisation, and also agreed to hold strategic economic dialogues annually. Some of you may remember the bum fight they had with China a couple of years ago, and China put tariffs on a lot of their products, and then that's been thawing out. So things have been getting better. Again, another country talking to China, China talking to another country, trying to get stuff done. And US Secretary of State Blinken is going to meet with the Chinese Foreign Minister Wang Yi today in New York. So again, more talks coming from that. Banxico, I even forgot about these yesterday. Banxico cut rates by 25 pips as expected to 10.5%. So they're keeping their rate cutting move going. Dollar mix at the moment looking a little bit high, but we're not really going anywhere new for now. It's been a bit up and down, this one of late. Bring it onto a wider one. So we're still keeping up above the 19s pretty much, but don't really look like we want to have another look at these 20s and have a little crack at these highs here. But keep an eye on that. So a little bit, we've still got this strong trend going on, so that uptrend is still in play, but it's expected that they're going to continue to cut as well as and when the data suggests. So maybe we will see a further bit of weakness coming in for the MEX. Over in oil, sources pieces, OPEC Plus likely to go ahead with a planned December oil output increase. They say the impact of the hike would be small given the expected compensation cuts by some members. So it's being spun as a bit of a tinkering message for that. They also said, or OPEC said, that it's currently, OPEC Plus is currently focusing on addressing overproduction by some members. This Israel stuff is still ticking over. As we mentioned yesterday, a bit of back and forth. The Israeli PM saying that they're not close to getting a deal done. US Defense Secretary said, we now face the risk of an all-out war, but a diplomatic solution is still viable. France's Macron still getting busy, said it would be a mistake for Netanyahu to refuse the proposals put forward. I don't know if that's a bit of Bloomberg spin on his actual comments. Now, we've been speaking that Trump has been not talking overly great about Zelensky. Well, apparently they're going to meet today, so we'll get to see what comes of that. It's important to know Harris and Trump's view on things, geopolitics, because obviously that's going to become an influence whoever takes over. So we need to. That's not important market-wise in the short term. Just getting an idea of which way they're leaning is going to be important for the future. Brand, I don't know. They can talk to who they want. Yeah, as far as I'm aware, politicians can talk to who they want. Our very own PM Starmer was very happy to take himself around Europe while he was in opposition, speaking to leaders. So yeah, they can speak to whoever they want, as long as whoever they want to speak to wants to listen to them, of course. Right, that's it from the headline front. So I'm glad it's Friday. I'll give you that, folks. Feel it's still. I had a day like it yesterday. Felt like I was chasing my tail, trying to play catch up all day long, and it still continues today. We got a bit of data out, important bit of data out later on this afternoon in the US. PCE data, which is obviously the second round of inflation numbers from the US following the CPI data a couple of weeks ago. PCE headline expected to drop 2 pips year on year, 2.3%. The core number is expected to go up a tick to 2.7% from 2.6%. So as far as the Fed's concerned, they've got a big hike. So this shouldn't really impact anything. But if there's a big variation, as always, if these numbers are softer, we're going to be playing a 25, 50 cut game once again. Hotter numbers, obviously, will see us move towards the 25 side. Cooler numbers will see us move towards the 50 side. So look for a reaction either way. You know what's coming. We know the Fed are cutting and will continue to cut unless there are any big upside moves in the data like inflation. So really, if you get a warmer number, shall we say, and we see yields rally and the dollar rally, then that may be something that short-term players will hit. just because the Fed are continuing to cut. But bear in mind, we are still in this risk on phase, coming from all those cuts. Still the market thinking that these cuts will be stimulative for the economy rather than just keeping things where they are. But I think that trade is that hopium trade is gonna start running out of steam soon, if it isn't already. Canada GDP is out a bit later as well. Another one just to keep half an eye on, though CAD's not doing an awful lot at the moment. And then the Michigan numbers for September coming in there. Those are final numbers, so they're just going to be revisions to that. And that closes off the week, thankfully. We do have a couple of squawkers, but I'm going to be probably halfway down a pint by the time they come out. Right, so talking about trade and whatever, I showed you China, a big influence in there. Really, we're still in this risk on mood sentiment, as I've just mentioned. So I'm keeping an eye on commodities like copper. Depending on what contract you want to look at, doesn't really matter. Things like gold, oil. Oil's a bit all over the shop again, just with what's going on in the Middle East and what's going on with OPEC. So more of your industrial metals are better to keep an eye on, just for this mood, this risk mood. But what I think we are seeing, well, as I said there, copper's continuing to go up. Gold, it's had a little move off the high, but it made a high yesterday, so it's still looking like it wants to go higher. So as far as commodities goes, precious metals, they're still quite bullish on this risk stuff. However, we are seeing some currencies just maybe starting to struggle a bit. Obviously, we had that first risk on move, Aussie dollar getting through 69s, then pulling back quite sharply. We've come back quickly, couldn't make a new high, had another go at 69s. We've come back again a little bit. We're still looking very bullish, but if you get further tests up here and they continue to hold and we're not pushing higher, all while things like commodities are still going, that again just gets the alarm bells ring that maybe F.A.C.E has traded through this risk on period, and now it's got to the point where it says, okay, you've traded a bit of hope, now we need to see some action. And that's going to be the theme moving forward. It's okay cutting rates and the market getting all bullish about it. That's got to turn into increased activity and seeing economies picking up. And if that doesn't happen, then the floor is going to fall out, much like it did when we got that consumer confidence data after we had this risk rally. So that shows you, we saw that in the dollar, what happened when that data came in bad and worse than expected, while the market's in a good mood, and dollar dropped. So yeah, I think there's a few currencies, you can look at. Kiwi had another go up into the 63s, couldn't quite get to those highs. Now we're off a bit. So yeah, I'm just looking for a bit of exhaustion, and it's evidence as well. If you want to look at the some of the crosses, we're having moves. Some of these crosses are still going. Others, though, are just holding up. We're not quite getting back down to those lows. I'm looking at the euro against a lot of these commod numbers. So yeah, we just euro Aussie still going, but some of the others are just holding up as well. NOK, that was another one. We've got this big rally up here because it was heading lower. Well, we've come back down a bit. We can't quite get back down or anywhere close to these lows just yet. So yeah, maybe just a bit of exhaustion going around. Euro sterling, another one, not doing too much, but it's keeping the downside in play and the potential for further downside. I think this is probably a bit more. This is a bit more on the fact these ECB stories from yesterday and the data that's coming out, just keeping the pressure on the euro, on the ECB versus Bank of England trade. If the ECB are going to have to go in October against when they might have previously liked to have gone, which would have been in December, then obviously we're going to see that divergence between them and the BOE staying on hold, opening up further. So that's one thing that's going to keep euro sterling on the back foot for now. Gavin, let's have a quick look at cable. Let's have a look. So we did manage to get a new high yesterday above that prior one we saw on Wednesday. So again, that's just a little psychological thing that we could move, continue to move higher. But again, maybe this turns into a bit of a more solid top. So a third attempt up here over any period of time, be it today, maybe on Monday, something like that. Again, if we get a third hold and it can't get through, then we're probably facing a steeper pullback. So if you are looking at from the short side, you might want to wait until that happens, or unless we get a break below this prior low on 133s. And then we'll probably see a bit of air come out the sails on that as well. Otherwise, if you're looking on the long side, then pick your levels. We've had the price support down here on Wednesday, so that's your marker, big figure as well. So if you want to try it from the long side, look for your lower risk entries. You don't have to be too wrong at this level to know that we're heading back lower. And as I said, it's real similar in a lot of pairs. Euro dollar couldn't get back up towards those highs, towards really putting a test of the 112. And I might have liked to have seen that just to maybe try a short. So again, we're still not dipping back too far. But we are starting to get a secondary hold here against this oldish level that we had a bit of action going through to there, and it's held up again in part here. So keep an eye on this one. Again, if you don't get through there, then maybe we are heading for a bit lower, and then we'll probably put in a proper test of 111 and see what it wants to do there. Again, if you're looking from the long side, then a break under here, 20s, probably takes us down to the figure 1090. And if you want to give it a knife catch, this is your low risk area to do so. Again, if we get a failure up at 112, I may look to take a separate short, looking for a bit of a steeper pullback on that front. Gav, I'll leave you to say it where we close the week. You know my lines, but I don't think it. Well, it might matter if we close the week. If we do manage to break some of these levels, 112, 69s in Aussie, 134 figures in cable, and we close that will likely be a springboard for further gains. So yeah, using my line, close the week. Matthew, a lot of currency pairs looking stretched. Yeah, I'm just getting that feeling as well. You think 10 years, US 10 years heading to 4%. You know what? I wouldn't rule it out. I think if we start to see what's going on there. Where's last after stuff? Oh, there we go. Thank you. Trading Views decided to wake up. I wouldn't rule out 10's going back to 4%, but I think, as I say, we need to see some stronger data. At the moment, we're seeing okay data. It's a bit like the porridge in Goldilocks and the Three Bears. It's not too hot, not too cold. It's just right at the moment. If we do start to see something hotter, then that's when I think we will get a move up towards 4%. As it is, look at it's still this is still all about the curve, really. 2 years are really staying low there. It's hard to see those climbing higher, significantly higher, unless we do start getting some really hot numbers. Maybe we get some spikes over things like NFP moving forward. But the market knows whatever's going on with the data, rates are still coming down. That's what you've got to keep in the back of your mind at the moment. The Fed wants rates down to a neutral level. Okay, and the only way that's going to stop or not happen is if we see inflation turning meaningfully back higher or the economy really heating up. If that doesn't happen, it's not going to take bad data to continue getting rates down. Data like we're getting now, just right data, not too hot, not too cold, is enough to keep rates being cut. Okay, so you have to just keep that in your back of your mind when looking at all these assets and what it will do. Nuno, yeah, by default, yields rising could get dollar yen rising. obviously the BOJ is still in play. I'm still favouring dips in this, even without the political stuff going on, the leadership race and whatnot. I'm still favouring dips in this one. I actually got knocked out of my trade yesterday, my long yesterday in this move here. We were looking nice around at 145, and then, you know, seeing me a couple of hours later, I look at the chart and we're down at the low 144. So I got tripped out my trailer just below that level. But as I said, I'm in again today. I'm happy to give it a bit of a wide berth on this one. Small trades, cover a wide pit distance if we get it. If we do continue lower, we got a big level down here, 142s, 141.70s, bit of a zone of action that we've seen previously. So that's an it. If we start getting under there, then I'll get a little bit wide about my trade, and then maybe I'll look to chuck it in. But otherwise, with yields keeping up, yeah, I think 144 will be a minimum. If yields are going to 10s are going to 4%, and maybe 2s are edging up to 3.6, 3.7, maybe even 3.8, then yeah, this is going to follow, and dollars going to take notice of it. But on that front, yeah, I think if I had to put a number on it, I'd say yield 2 years back to 3.8 is probably a little bit too hot. But I wouldn't rule out maybe getting up to 3.7s in you know, on data moves and stuff like that. So yeah, I think the volatility we got in yen, it can go to 144, it can go to 145 just as easily as it can go to 142. You know, it's well within scope given the volatility. We're only 72 pips away now, and yeah, 144s could be easily a closer look. I'm still keeping all this short term. Okay, this is all my easel, if you like. I'm still painting the picture from here. Okay, it's a bit messy at the top. I'm not really seeing anything that warrants saying yet we've got a top coming in. It's all being developed. You know, we've moved up and down this 70 line. We've tried holding it. We're back under. We're holding under. So it's a bit wishy-washy here. So that needs a bit of development. This area, 26.50s, we've had a bit of confirmation there. Okay, but again, this is just, you know, over the course of, you know, a day, not even that. So it's not something you can bet the farm on right now, but you paint the picture and you let the levels develop. And if this tests once and then tests twice and tests 3 times, then it's building into something more. And then you make it something more, and you make it something you can potentially trade against. The top up here, there's nothing clean up here to say pile into shorts because we've got a top, because we've had similar price action here, and then we went off, and then here, and we went off, and here we went off. So until you start getting this sort of stuff, and we know that was, you know, marking a decent range, you could trade in between there if you wanted to, or wait for the breaks either side. So until you start getting solid price action like that over a decent amount of time, this stuff is still a guessing game. This short-term stuff is still a guessing game. You know, it's only taking a day, a session, a couple of sessions, and we're off moving again. And so, yeah, if you're trading gold, if you're long, sitting in longs, fine. All you need to be doing is protecting what you've got. If you've been long from down here, like I know K-Man was, then all you're doing is just moving your stop up behind, moving your stop up behind, taking profit, and just managing the trade. If you are missing all this and thinking, well, if I miss buying it, I need to sell it because it's gone up a huge amount, so it must come down, you can't do it until you get some evidence. So wait for that confirmation before you start piling in. Right, unless you guys and girls have got anything else to you want me to talk about, I might call that a session. I need to get my head stuck into my trading platform and keep an eye on what's going on, and get some trades on the board and managing. So if you haven't got anything, guys and girls, we should call that a day. Thank you as always for coming to the Flow Show this week. K-Man's probably going to be off for most of next week due to personal reasons. He's all well and good, I'll tell you that, but yeah, he's off for personal reasons. I am going to have a couple of guests lined up for next week as well early next week, potentially Tuesday. So don't miss that show. And don't forget to take advantage of our sale and the offer for 12 months free at Peak Suite. And if you are already a Forex Analytics subscriber, if you're in our chat room, check out that, because you can get that 12 months free as well. And if you want to have it and missed a comment, then just message me in the chat room and I'll sort you out with that. Have a wonderful weekend, everybody. Trade safe today. Don't blow up a good week trying to grab some pips on a Friday afternoon. Fridays, pips are beer pips. Have a good one, everyone. See you next week.